Hi, this is Wayne Zell, and welcome back to Blueprint for Wealth. Today I'm talking about, on our educational moment, the low-income housing credit, why it means something, how it works, and how it might affect you as an investor. Today we're just going to briefly discuss what the low-income housing tax credit is, how to qualify for it, how to calculate it, how to allocate it, and what the costs and benefits of it are. The LIHTC, Low Income Housing Tax Credit, was initially enacted in 1986 to provide tax incentives to construct or rehabilitate affordable rental housing for low-income households. It has supported the acquisition, construction, or rehabilitation of over 2 million units since 1986. Basically, the federal government issues tax credits to the states and the territorial governments, and then the state housing agencies in each state award the credits to private developers of affordable rental housing through a competitive bidding process. The developers usually sell the credits to private investors so that they can get funding to help build the projects. Once the housing project is placed in service, in other words, when the tenants occupy the units, investors can start claiming the benefits of the low-income housing tax credit over a 10-year period. Many types of rental properties qualify for the credit, including not only apartment buildings, but single-family homes, townhouses, and duplexes. In order to qualify, 2 tests must be met. The first, known as the income test, can be satisfied in basically 3 ways. First, you can get the credit if at least 20% of the project's units are occupied by tenants who have an income level of 50% or less of the area median income adjusted by family size. That's known as the AMI. Or you can qualify if at least 40% of the units are occupied by tenants with an income of 60% or less of AMI, or at least 40% of the units are occupied by tenants with income averaging no more than 60% of AMI, and none of the units are occupied by tenants whose income is greater than 80% of the AMI. The second test is known as the gross rent test, and in that particular test, the rents being charged to the tenants cannot exceed 30% of between 50 or 60% of the area median income, depending on the share of the tax credit rental units in the project. All of these projects must continue to comply with the income and rent tests for at least 15 years, or the credits are recaptured dollar for dollar. In addition, there's an extended compliance period after that, totaling 30 years, generally imposed on these projects. Basically, the annual credit is a percentage multiplied by the project's qualified basis. The percentage varies depending on whether it's new construction or substantial rehabilitation versus projects that might be rehabs or funded with tax-exempt bonds. Qualified basis refers to the portion of the housing project that is rented to tenants who meet the income tests. The low-income housing tax credit statute basically specified that the IRS would periodically reset the credit percentage to maintain the present value of a 10-year stream of tax credits at either 70% or 30% of the project's qualified tax basis. But because interest rates have been so low, the present value of credits actually has exceeded 70% of the qualified basis for many of the projects. In 2022, each state is allocated the greater of $2.975 million or $2.60 per person. That's dropped a little bit from 2018, but it's still pretty significant for states with large populations. The states then allocate these credits to the developers based on whatever the state's allocation plans are for low-income housing. Projects that are financed by tax-exempt private activity bonds don't need to obtain a separate credit allocation from the State Housing Finance Authority, but the state still has to approve of the use of the bond, so it's still regulated at the state level. The developers then turn around, syndicate these projects, and sell the credits to investors who may be able to use the tax credits better. Oftentimes, these credits are sold to large corporations. They may be sold to financial institutions who can utilize the credits. Most investors in low-income housing tax credit projects are corporations and financial institutions, but many are sold to very wealthy, high-income taxpayers. Are the benefits worth the cost of the credit? Well, the credit costs the federal government upwards of $10 billion a year. And the arguments in favor of the credit is that it's a good program for essentially increasing the amount of affordable housing stock over the period that it's been in effect. It also addresses a major failure in our marketplace, the lack of quality affordable housing, and efficiencies can arise from using private sector business incentives to develop and manage and maintain affordable housing. But there are arguments against this. In other words, is the federal subsidy overinflated? Because you're not only providing low-income housing, but you're helping the organizers, the syndicators, the developers of these projects, and the managers and the investors. All of these people benefit. Is it really worth the cost? So a significant portion of the subsidy doesn't go into the creation of new rental housing stock. It may go into the pockets of the investors or the syndicators. In another criticism, many people say that the statute and the regulations are extremely complex to the point of being overly complex. And state housing finance authorities often approve of low-income housing tax credit projects in ways that concentrate the development in existing low-income communities. So you're basically propagating the poverty that exists in those areas by just building more housing in those areas. Why not build it in more affluent areas? So that's a little bit about the low-income housing credit. And it definitely can help you lower your income tax liability. If you'd like to find out more ways of minimizing your income tax liability, give us a call at 571-203-9355 or visit us on the web at zelllaw.com. I'm Wayne Zell, and thank you for listening to Blueprint for Wealth and our educational moment designed to help you realize your personal dreams of wealth and freedom. Have a great week.